Mr. William Martirez. He is the president of MicroEnsure Philippines. It is one of the major players in the microinsurance industry in the country, and he will share some success story that the company has had here in the Philippines, and share some highlights of the discussions earlier. So may we call on stage Mr. Martirez.
Good afternoon. Thank you very much for this privilege. Uh, MicroEnsure Philippines is a global intermediary. We operate in various countries in the world. We were the first who practically focus on microinsurance as a global intermediary. Uh, We have the MicroEnsure has been winner of the Financial Times Awards many times for its innovation in the industry. We also lead in weather index and agricultural insurance, and we we also are very popular in mobile insurance in many countries, except in the Philippines on mobile, because our model in the Philippines as is a broker. Although worldwide we try to adopt that brokerage model, but because of regulations in different countries, we cannot have that kind of model everywhere. In the Philippines, we were first recognized as the first insurance intermediary who are able to make microinsurance sustainable and commercially viable uh, since the first year of operations. So in the Philippines, we have been here since 2007. Our home base is in Iloilo. Uh, and we average approximately 100 million pesos in payout in claims almost every year. Uh, our biggest payout, of course, was on Typhoon Yolanda, which we have paid 250 million in claims. It is recognized as the biggest microinsurance payout for one event worldwide. Uh, it involves 90,000, more than 90,000 people. Uh, we are uh, we are in 52 provinces in the Philippines, and but there's only one office, so we use technology and systems very much. Uh, Name any island in the Visayas, practically we are there. And if you look at microinsurance is a poverty reduction tool. Okay, as contrasted to commercial insurance. And so many people try to confuse this. But we are of the firm belief that microinsurance is not a CSR thing or a corporate social responsibility thing, but it is a commercially viable and sustainable business model and is considered as a social enterprise that addresses poverty reduction. So we cover around 2 million in the entire Philippines. We average around 30,000 new policies every month. And we have a wide range of products and services. And we go to different distribution models. We have introduced more than 70 innovations in the industry since we started. Uh, from weather index insurance. We were the first to introduce that in the country. Uh, in agriculture and in calamity. Many of our products and services have been copied also in other countries. So perhaps uh, with that short introduction, I can ask some you can ask some questions, because if you're going to let me talk about microinsurance, then we might stay here till tomorrow.
Okay.
Thank you very much.
So, is there anyone who would like to ask the first question? Perhaps you can talk about also the outlook for the industry, because MicroEnsure is one of the biggest players in the microinsurance industry in the country. So, okay, Jen.
There are big insurance names in the Philippines right now, but they do not dare go to microinsurance. What could be the biggest hurdle in that particular area? Why companies such as Sun Life, Manulife do not? They are big names internationally and here in the Philippines, but they do not offer microinsurance as as huge as the microinsurance companies do, in particularly in the provinces.
Let me clarify that first. MicroEnsure is not a risk taker. We are a broker. In other words, we design programs, policies, and services to suit the intended market or to our clients. Okay, the insurance companies are the risk takers. Okay, now uh, many of the big players in the industry have some form of microinsurance in other countries also. Okay. Now, why are they not in the market right now? Perhaps the biggest apprehension of insurance companies is that they still do not understand the market. And just like any business proposition, they have to be comfortable on the market. And there are actually insurance companies that you won't expect them to go into microinsurance, because either of their business proposition or their market niche that they want to intend. Okay, there are those, like for instance, there are those players who may just choose to be comfortable on the certain economic niche that they want to reach. So just like banks, for instance, not all of them are into microfinance. Okay, uh, and so I think, but there is a going trend worldwide to have the slice of the market of microinsurance. Again, microinsurance is not a mere marketing strategy. We believe it's a different uh, species in insurance. Okay, and there is a specific niche that you would like to address.
Okay, before we proceed, I would like to introduce to all our media friends Mr. Arup Chatterjee. He is a principal financial sector specialist from the Asian Development Bank. So he will also provide us some highlights of the session earlier. Okay, any more questions for Mr. Martirez or for our guest from the ADB? Okay, Mika.
Good afternoon. Mr. Martirez, I'm Mikael Flores of Business World. Sir, what's your outlook for the microinsurance industry this year? What do you think will be the drivers to the growth of the industry, as well as to the growth of your own company, MicroEnsure, and what also are the risks involved toward that, toward your outlook?
Actually, we are very bluish insofar as the microinsurance industry is concerned. Okay, there is now much consciousness insofar as the need for insurance, especially after the many disasters that we have, and the success also of the microfinance industry has also helped propel the growth of microinsurance. But more so because uh, as uh, as our economy grow, there is also a need to address and people are very conscious of insurance, and now they have the trust that insurance can pay, as contrasted before. And they now have the mindset that insurance is not only for the rich, but also affordable and accessible. That's the most important thing. Because microinsurance is now accessible even if you are in the mountains. And I think that's one crucial factor. And of course, the enabling environment that government has provided, and technology. Right now, we are also bullish that with the technical working groups and the frameworks, like for instance, we just finished the draft for micro health, microinsurance health, which will help supplement and complement the field health efforts and universalized healthcare in the country. We are also now in the process of working on microinsurance agriculture, on the framework, and a lot of initiatives. And as I said, there is a big demand right now for microinsurance products and services.
Sir, do you have a particular target like net net income growth of by how much percent do you see your company growing this year?
If historically in the Philippines right now, the growth rate is around 17, 17% for microinsurance, it would be safe perhaps to really project that a growth rate of 10 to 15% would be easily achievable by the providers.
Okay.
Of course, as a caveat, there is still a need to have a very rigorous reinsurance market in the Philippines, especially for innovative products, because some insurance providers are not yet very comfortable of some of the risk that the market demands. So they need to partner with more experienced reinsurance providers worldwide.
Thank you, sir.
Mr. Arup, perhaps we can request you to give a brief statement, share some highlights of the sessions earlier, and as a specialist from ADB, your views on the importance of microinsurance.
Okay. Well, thank you for inviting me for joining this press conference. Today, I attended two sessions, basically. I spoke at one, I moderated one session. The first session was talking in terms of innovative approaches to microinsurance, and where we discussed three types of things. One is public-private partnerships. How can they help in expanding the insurance market? And what is the justification for public-private partnerships? We also discussed, based on feedback from the Philippine insurance industry, about the role where innovative channels like brokers can play, microinsurance broker, MicroEnsure was also one of the panelists. And we also discussed about the role of again, another innovative channel like using a pawnbroker. So the two panelists from Philippines focused more on the distribution and servicing of insurance, and I focused more on public-private partnerships. In my presentation, I focused on the motivation behind public-private partnerships, which are mainly three or four. One is where the government is trying to manage its fiscal capacity or fiscal risk through disaster risk transfer or risk transfer, basically. If you look at disaster insurance, it is disaster risk transfer. If it is health insurance or agriculture insurance, it may be just risk transfer. And then, so that is one of the motivations. The other motivation is that the private sector has to then lock a lot of internal reserves. So whether that capacity can be unleashed or unlocked for more productive investments through risk transfer. So that was one message we were trying to send. The second is, of course, the last mile connectivity, where organizations like, where sometimes government organizations use private distribution channels like brokers, some innovative channels like pawn shops, or even, say, a private company can use a post office network to sell insurance, or rural banks or cooperative banks. One issue which came up was also that a lot of the countries in the region are moving from low income to middle income. So they would not be beneficiaries of official development assistance from multilateral agencies. So they need to be a little bit more strategic in terms of defining how they can have access to more sustainable and assured financing. So that is one of the reasons they are also looking at partnering with private sector for risk transfer. And finally, one issue, an additional issue, was looking at sufficient liquidity after the onset of a disaster or crisis. And that's where perhaps insurance plays a major role, because when a disaster strikes, governments don't have money immediately at disposal. They have to reallocate their budgets and things like that. That takes time. Whereas if they have access to insurance, the insurance makes good that deficit and provides liquidity at short notice. That was one major issue which we came up with. The second, in that session, we came up with issues in terms of risk layering, in terms of defining if government in many countries today is taking an increasing role as part of financial inclusion to open bank accounts, to promote microinsurance and things like that. So we need to define areas where government should get involved and should not get involved, because if governments get involved, there is no incentive for private sector to participate. So we were looking at one level, which is the risk retention level, where households or private sector or businesses feel that they can withstand the risk on their own, no need to insure, no need for government support. The second layer is where the commercial insurers come into play, where public find that insurance premium is affordable. The commercial insurers see that there is a business sense for them. They can make reasonable profits. And finally, there is an area where both the public are exposed. Commercial insurers are not interested to insure those risks, and therefore how governments and private sector can play a role. Perhaps that is the disaster risk transfer element. Talked about in terms of innovation into some of the examples, which we can discuss later. And I provided an example from India, where the Prime Minister has recently launched a program known as the Prime Minister's Jan Dhan Yojana, where banks are being encouraged to open bank accounts for the unbanked. And as part of that financial inclusion program, they have a strong insurance component. So that bank accounts can be opened by those who have access to a smart card. So they have a unique identity in terms of biometric cards. And then once they have access to that, they have people with 18 to 70 years of age. They have access to personal accident of up to 200,000 rupees for accidental death and disability for a premium of about 12 Indian rupees, which comes to about, so that breakup of the 12 rupees is taken as 10 goes to the insurance companies, 1 goes to the bank, and 1 goes to the correspondent bank or the agent. So that's where banks and insurance companies get involved. We have state-run banks in India, and also private banks, but the government is really pushing that initiative. There is also one for life insurance, where again people with 18 to 60 years of age, for a premium of 330 Indian rupees, get a coverage of 200,000 Indian rupees. So out of this premium of 339 Indian rupees, 289 rupees goes towards insurance, 11 goes to the bank, and so there is an incentive for the bank to sell that insurance, and 30 goes to the agent or the correspondent bank. So we have been talking throughout the morning until late now about how to protect assets, how to protect lives. But another thing which is also looming in the horizon is longevity risk, how people are living longer and how they take care of their pension liability and things like that. So in India, again, from 1st June of this year, they have introduced a pension scheme as part of the financial inclusion agenda. Again, it will be open for people from 18 to 40 years of age group. If anybody is more than 40, they cannot enter the scheme. They'll have to contribute for a period of 20 years. If they contribute 48 Indian rupees per month, they will get 1,000 rupees of pension after 20 years. If they contribute 248 rupees per month, they will get 5,000 pension at the end of 20 years. If these contributors are not income tax payers, the government will also give what you call a matching contribution up to 50%, up to a limit of 1,000 Indian rupees. So these are certain innovative ways for public-private partnerships. So that was one message I wanted to send, that there are innovative ways where governments are getting involved, but we have to be careful in terms of areas where governments need to get involved. And also we need to be careful in terms of defining what role the government players should play and what private players should play. This is very crucial in terms of insurance, where governments are subsidizing insurance policies, because if governments are generally providing subsidies for premium and not for claims, so if the policy is not appropriately priced, is not actuarially priced, then there is possibility that the claims experience will far exceed the premium which the companies earn. And then that will affect the solvency of insurance companies, and that will definitely give sleepless nights to the regulators. So that is something which we flagged. I also mentioned about possible risks when governments are trying to bid for insurance premium in many countries. That has also certain unintended consequences in case the bidding process is not proper, and the public or any other entity take those companies to court, and suddenly through a court order, insurance is suspended. So how to deal with those types of eventualities, I think we have still not thought through. So those are certain things we need to be mindful of. The second session was more on how microinsurance can play a role in disaster risk management, which I moderated. It was mainly based on the experience of Philippines post-Typhoon Yolanda. Microinsurance has played a positive role. The regulator has been responsible primarily for this because of taking a very proactive and innovative approach for speedier settlement of claims. So when claims are settled in a timely manner and the customer sees benefits coming to them, that word of mouth spreads and more people buy insurance. And that is what is also happening in the Philippines, and that is also driving growth in terms of the positive experience of the customers. I have seen in other countries of the world where insurance companies where people have lack of trust in insurance companies, and it is in those countries where it is very, very difficult to penetrate the market. One bad failure of an insurance company has a systemic effect, can set back market operations by a generation. So if the father has had bad experience, the sons and daughters or anybody, they will always hear negative messages about insurance companies. So it will take at least one more generation after that to restore the trust. So those are some things which are very, very important, and the Insurance Commission of Philippines and the market players need to be complemented with whatever they have done. They have also introduced some other innovative innovative components like insurance literacy, alternate dispute redressal mechanism, a very well-coordinated consultation mechanism, which also drives microinsurance market in this country. Thank you.
Okay, thank you very much. Is there anyone who would like to ask the next question for our two speakers? Okay.
Good afternoon. Mitch Lipa, ABS-CBN Bacolod. My question is for Mr. Martinez, sir. I'd like to go back to your statement earlier. You made mention that microfinance is not a risk taker compared than the commercial insurer. Am I right?
I was saying that the success of microinsurance is also attributed in part to the success of microfinance.
Okay. May I know if there are tools in this conference to protect the microfinance that won't be that won't be vulnerable to scam and possible to bankruptcy of an insurance, just like what's happening to other commercial insurers right now in the Philippines?
Okay. Let me explain. Microfinance is one of the most tested mechanism worldwide to reduce poverty. Okay, but microfinance is a pyramid. It's a three-legged tool. No? Microfinance has three components. What does microfinance does? It practically wants the poor to be an entrepreneur and to think as an entrepreneur. So what do you need in order to be a successful entrepreneur? First, you need capital, and microcredit provides that. Okay? But microcredit alone will not be able to sustain that program. You need microservices or micro skills, such as the skills to develop your business, access to market, the technology, and there are other providers for that. That is why we have even bookkeeping, financial literacy tools for the poor that they will be able to help manage their company, correct? Or we provide them skills how to package their business. We link with TESDA and those things, okay? So that is microservices. It's just like having a professionalizing how to run your business, okay? The third is microinsurance. Even if you're going to go to a bank, if you're a big business, the banks will require you to insure the risk, to insure your business, okay? So these three components, coupled with the transformation values, or what we call financial literacy tools or microinsurance tools and capability building, comprises the pyramid of what microfinance is. Okay? Now, while the success of microinsurance in the Philippines is not only dependent now with microfinance or microfinance institutions, but the big bulk of the policies are still with microfinance. Okay, what is the beauty of microinsurance? It provides the avenue where a person can get credit, because many banks, for instance, would not want to lend in agriculture because it is risky. But if there is an agricultural insurance, then it can cover the risk, correct? Okay. Now, there are many kinds of products that protect the creditor. that is in the market for microinsurance. Okay, there are many. We have mortgage redemption, we have loan redemption insurance. We have a package, for instance, in MicroEnsure, which we call triple care, wherein it covers the risk if the creditor, if the borrower dies, or his co-maker dies. Remember, in microfinance, there is no collateral. In case he goes to the hospital, he is sick, and he cannot pay because he is sick, then we pay part of his amortization. Or when a disaster strikes in his residence, then we pay the amortization. Okay? And there is a trigger wherein we might even pay the full amount of the loan. Those are examples. Those are examples that we have. If we go to micro housing, for instance, we have a package wherein we cover the house for fire and lightning and earthquake and tsunami, typhoon. I mean, 8 perils. We pay for the house if it is damaged, or we pay in calamity. We even pay for an evacuation allowance even if the peril did not occur. For instance, there is a threat of flood, and the mayor says, okay, all of you evacuate to the evacuation center. We will pay you for every day that you are in the evacuation center. Even, as I said, the peril would not occur, but so long as you're asked to evacuate. And it is covered with a personal accident insurance. That, you can buy that in units, and the premium there is 500 pesos a year. Most calamity products would only cost approximately 1 peso per day, which is around 350 pesos a year. You can buy this in units, depending on your affordability. We even have a health insurance that covers up to age 80. It's a family of 4. It has the same benefits for everyone. It covers for every day that you are in the hospital, including a bantay allowance. Okay. We are referring to a companion allowance, not the dog of Rizal. Okay. So it's a bantay allowance. So we usually have a companion when we're in the hospital. We provide bantay. We also provide a transportation allowance, which takes care of the ambulatory services, and an extra pay or benefit when you exceed 10 days in the hospital. You can buy this in units. Even if you have pre-existing illness, even if you have cancer, we can cover you. Okay. So those are the innovations in the industry on the microinsurance side, which even in our micro-housing, for instance, go to Forbes Park or Dasmariñas, generally, they would not have that kind of insurance that we have, covering 8 perils for that. So these are innovations, and we believe we also have to protect this, that we should really avoid fraud on this. But technology plays a vital role in administering this kind of insurances.
Any other question from the floor? Yes, sir.
I am just wondering, sir, why is it that there is a limit of 80 years old in our country? In the States, they, even if you're 90, 91, 92, you can still work and still be covered by insurance. Why is it that in our country it's only up to the age 80?
No, there's no limit insofar as life is concerned. In life insurance, even 30 years ago, insurance companies can cover you up to age 100. Right now, we are even developing a product for life insurance up to age 120.
No, but
Insofar as life. But of course, in health insurance, it is depending on the appetite of the insurance company whether they want to cover it. Generally, if you're not thinking in terms of microinsurance, you can buy any insurance that you like so long as you can afford the premium. Okay? That is on the commercial side. But when we talk about microinsurance, we try to universalize the premium so that everybody can avail of it. And so there's also to protect also the program. There are of course some rules or limitations on how much the risk would be.
Yes, but why is it 80? Why not 90? Why not 100?
Well, our current product right now, our reinsurance only allows us up to age 80 at this point. Okay. That is a vast improvement considering that our product considers even pre-existing illness. In most hospitalization insurance in the country, if you have a pre-existing illness, they will exclude that from your cover as a general rule. Okay? Our product is a very big innovation that even if you have pre-existing illness, we will cover you up to age 80.
Up to age 80. That is the question that I would really like to answer. Why have you set a limit of age 80?
As I said, it's a financial decision considering that our reinsurance only allows us to age 80. Okay, so in other words, insurance is pooling of risk. Pooling of risk. Generally, an insurance company will also share this risk with other insurance companies. And if the market only accepts at this point 80, then that means it will be the risk taker who will assume beyond that 80. So far, because we are a broker, we are not an insurance company. We are a broker. Our insurance providers will only allow up to age 80.
Thank you.
Any other questions? Okay, yes, ma'am.
Good afternoon. I'd like to refer the first question to Sir Martinez. Then the other question will be for Sir
Arup.
Chatterjee. Okay. First, on micro insurance, what is the lowest premium and what is the maximum, and how much is the payment then, and how soon or how fast could you release the payment of the claimants? Okay? And I'll have this wholesale already. To Sir Chatterjee, do you, if the government will apply loan from the ADB, do you charge interest?
Yeah, we charge interest.
How much is the interest?
Well, it is based on several factors and what type of loan it is, basically. But generally it will be LIBOR plus 0.05. So it's still a concessional loan compared to the loan you avail from the market. But again, if it is something for social sector and things like that, it might be cheaper also. So it depends on the tenure of the loan, it depends on the amount of the loan, and also type of the loan. For what sector are you applying for?
In the whole world, what country has the biggest loan from the ADB? And how much? Thank you.
Well, that's a difficult question. I am not prepared for it, but if you give me your email, I can get back to you on that largest loan size and the country. Sorry for that, yeah.
On premiums, okay. The microinsurance regulation provides a maximum of 7.5% of the non-agricultural minimum wage in Metro Manila. So if the Metro Manila minimum wage is 400 pesos, roughly, so the maximum premium is 7% of that, which is approximately around 48 or 38 pesos per day times 365. But there is no product in the Philippines that is charged that way. Okay? Now, microinsurance, we have policies as low as 40 pesos in premium. Our average, yes. Our average our average premium for a bundled product that includes life and calamity will cost around 800 pesos in 1 year. As I said, we have products as low as the average product will be around 300 pesos, 350 per year. And you can still get it in unitized. But we have products, especially 4 months products that are as low as 40 pesos. We have even agricultural insurance as low as 40 pesos. Uh, we might as well say, yes, it might be a competition with PCIC, but PCIC is different, okay? PCIC, they have experimented on weather index, okay? But as far as I know, the current products of PCIC are still indemnity-based, okay? We do not generally compete with PCIC because they are subsidized and sometimes they give it for free. The private sector cannot do that. But we have weather index insurance, and we believe that ours is a big innovation and it is faster. Okay, with regards to payout, microinsurance regulation is that 10 days upon completion of documents, the claim has to be paid.
Any more questions,
Yes.
Kai?
Good afternoon, sir. I'm Kai Ordinario from Business Mirror. I just wanted to ask, since you mentioned PCIC, how do you assess the services and the products offered by the PCIC, and how should the government improve them?
I would rather say, okay, the industry is looking forward that PCIC would be more an aggropator, and would help propel the industry insofar as agriculture, but not as a competitor. Because we believe that no insurance company would be sufficient to handle all the agricultural needs of the country. And we believe that if there will be no end insofar as subsidy is concerned, if that is the case. We have proven that agricultural insurance can be a viable proposition. But of course, the private sector can never compete with government if it is a competition because they don't pay taxes, they don't have premiums, and all that stuff. I'll give an example. We have one weather index product, and that includes a 27% tax. If we take out the tax, our premium would cost less than what government is charging. That is assuming that government is charging the premium that it has proposed instead of giving it away. So there are products that the private sector can really provide more efficiently. But as I said, PCIC is with us. It is a social tool, but we just hope that they can rationalize and that it will help propel the industry instead of competing. Because we believe that historically, government cannot really provide for all the needs of the 4 million farmers and the needs of agriculture. And that is currently the disincentive because we have an agri-agra law that provides incentive to provide lending to agriculture. But because agricultural insurance cannot really prosper right now because the lack of enabling support because of the competition in quotation marks, then few players are willing to engage in it. And so it becomes a very challenging proposition. But we hope we can, with the political will of government, we can rationalize it.
Okay, perhaps we can accommodate 1 to 2 more questions from the floor. Are there any more questions? Okay.
Yes, Mr. Abub, what best practice in your country that we can easily apply here in the Philippines, especially in microinsurance, because we are oftenly visited by calamities than your country?
Well, the best practices differ from country to country because the nature of the risk differs from country to country. Philippines and India, of course, is a much diverse country. Then it's more like a subcontinent compared to Philippines, but most of the risks are there. What is there in Philippines, whether you call it typhoon or earthquakes or volcanoes and everything. Well, Philippines has done more or less similar things what India has done in terms of disaster risk management. They have an integrated disaster risk management approach, which India also has. In terms of insurance, specifically, let me come to that. Earthquake insurance is one of the insurances which is seen as disaster insurance. And the problem, I would say, is the same whether it's India or the Philippines. Earthquake insurance is not sold separately. It is sold as an embedded element of the fire insurance policy. So if you have a fire insurance policy, again, it's not likely you will have earthquake insurance because it's an optional policy, option under fire insurance. If you tick the earthquake insurance option at the time of purchase, then you are covered for earthquake. Otherwise, even if you have a fire insurance, you are not covered. So the regulator there has been encouraging, I would say, through awareness campaigns in different languages. We have 28 languages. I think we use 30, but the advocacy is in about 13 languages, where we have tried to send the message about the importance of earthquake insurance. But people's memories are short. After the earthquake, yes, there is demand for earthquake insurance. Then over a period of time, they lose interest. So the earthquake insurance is not there. As part of mortgage insurance, as part of mortgage finance, earthquake insurance is more or less compulsory, you know. So if you take loan from a bank to purchase an apartment, till the loan is outstanding, you keep on paying earthquake insurance premium. But then once you repay your loan, we have seldom found that the earthquake insurance is continuing. So that is not happening. And there is a lot of talk, as it happens in Philippines, as to how can we encourage earthquake insurance, should we put it as part of the property tax and things like that. And again, the challenges are similar because there is undervaluation of property. You really don't know what would be the right price. And what happens in insurance especially is, if you underprice your insurance, say if your property is worth 100,000, you show it at 80,000, the insurance company penalizes you for underinsurance. So even if there is a legitimate claims, your claim will be proportionately reduced. So there is a double loss in that sense. So those are the types of things which happen, but there is, well, insurance culture is not there. And the second is, people's memories are short. But if you see the younger generation today, the younger generation is buying more and more of insurance, including earthquake insurance, fire insurance. If you look at health insurance, it's part of the salary negotiation or wage negotiation with the employer, how much health insurance coverage I will get. Along with earthquake insurance, they are also getting their contents insured also, because husband and wife both are working, and there can be a possibility of theft or some electronic appliance not switched off, it can catch fire and things like that. Earlier, people were suspicious about revealing facts about the details of household contents, like what assets you have, because they thought that that information will be passed on to the income tax or the Internal Revenue Department, and then they will come and ask for your income details and things like that. That mindset has, over a period of 15, 20 years, I find that is no longer there. And now people are more willing to disclose what assets they have, because they know if they are lost or they are damaged, it can really blow a hole in their pocket. So the culture is changing. It takes a generation or more than a generation to change. The second thing which I see in terms of promoting insurance, which though the question was not asked, in terms of promoting insurance, I find the woman has played a very important role, be it the mother, be it the daughter, because home is the best school, and it is the mother I have found who has been more or less careful, or they have, in terms of insurance awareness, I found the mother to be more insurance literate than the father. And she ensures that her husband pays insurance premium regularly. And that is what children pick up when they are growing up, whether it's a girl or a boy. And when they grow up, ultimately that insurance culture percolates in the next generation. Then if there is a good experience in the family of insurance, again through word of mouth, the ladies, well, we always as males talk that ladies gossip, but sometimes as part of the gossip, some of this good news also travels, like bad news also travels. So there's a lot of awareness building through experience sharing of the woman. And I've found that message has also got relayed when women meet each other or through their networks. So that has also played a very positive role. And I'm telling this you based on my personal experience. I have left India about 12 years back. So whatever I'm telling you is based on my experience 12, 13 years back. We used to do these insurance awareness programs. We used to see the level of awareness before the program through surveys, and after the program through surveys. And we found consistently that the women were more aware of insurance needs, insurance programs compared to the men, both before and after the survey. But the awareness level amongst women there was a very steep learning curve amongst women compared to men. And though we chose those programs at what you call as the prime hours, between 6 o'clock to 8 o'clock in the evenings, when generally the families sit together, have a meal or watch television together. So those are some positive experiences which I can share. And since we share common borders with countries where the same language is spoken, we had a ripple effect, like Pakistan and all. We are told, we have not measured that, they also used to listen to those programs. It helped in uptake of insurance there in Nepal, in Bangladesh, and also in Sri Lanka. Thank you.
May we take one last question from the floor? Any more? Okay, Mika.
To Mr. Arup, what do you think are you mentioned a while ago in your statement that you tackled PPPs in the forum, in the discussion. So what do you think are PPP projects that would be commercially viable for microinsurers, especially here in the Philippines?
Well, let me go to two examples of PPP projects maybe, and that might give you some idea. Because it's difficult to suggest something in the absence of numbers and details. Something where I worked in Pakistan recently on a PPP arrangement where we have a program known as the Benazir Income Support Program. Under the Benazir Income Support Program, there are three elements which are there. One is a conditional cash transfer where a female head of a household gets 1,200 Pakistani rupees every month. Then a family is covered for 30,000 Pakistani rupee, 25,000 Pakistani rupee insurance for catastrophe where pre-existing illness is covered. So anybody, maybe the husband, the son, the daughter, anybody can be treated, and there is no limit in terms of family size. And then there is a personal accident coverage of 100,000 Pakistani rupees. It is below the poverty line, entire premium subsidized by the government. The customer has a choice in terms of, there is a network of dispensaries and hospitals with whom there is a tie-up. They can go to a provider of their choice and get their benefits. So in this scheme of things, we did a pilot in the state of Faisalabad in Pakistan, and we found that, well, I should ask a counter question. What would you think would have been the experience of this type of a program in terms of claims ratio? Everything covered, and
how about expanding the Philippines' own CCP
so
program to include?
that's what I'm telling you. So
Yeah.
this program was there in Pakistan, and the experience, well, the claims ratio was less than 0.03%. The reason was there was very low level of awareness about the program. So you have similar programs like the PhilHealth and all here also. We have a similar program in India known as the National Health Insurance Program, where for a premium of 30 rupees, coverage of 30,000 is given. Again, under a similar arrangement, you can go to a hospital of your choice. So those types of risks can be covered under health insurance. It can be covered under agriculture insurance. It can be covered under disaster insurance. It depends what is the focus of the government. The essence here is why do we choose public-private partnerships? We choose public-private partnerships because, as I explained in the first time, the government would like to manage its fiscal liability, okay? Because they allocate a certain amount of money to help poor or vulnerable sections of the community for health risk or agriculture risk. Instead of that amount, they reallocate a certain portion of that as insurance premium and cover it. The insurance company manages the risk for a fee. And then if the claims ratio increases, the premium increases. If the claims ratio comes down, the premium comes down. So when policies like this are introduced in the country, since there is lack of awareness, the premium level is actually determined, but still the claims are low because people don't know how to claim. So what happens, in the subsequent year, the government says, well, your claim ratio is so good, why don't you bring down your premiums? And that's where the danger starts. You bring down your premium, which is not actually determined. People learn more about insurance, they start claiming more, and then you are caught in a trap. You pay the premium which is not mathematically determined or actually determined, and therefore the subsidy really doesn't work. You are in a black hole, and there is always a funding gap. So those are certain things which needs to be taken care of. If you have a good risk modeling in place, if you have actuarial pricing in place, government knows what is the estimated premium which they are charging and what should be the premium which should be charged. They know the gap. They know what is the subsidy to be provided. If they don't know that, they are in a black hole. And that is something which, so public-private partnership is the buzzword today, but certain preconditions need to be put in place. Unless you have those preconditions in place, you cannot or should not start with a public-private partnership. So one is your assessment of risk. The second is the pricing of the risk. And the third is how people use that facility in terms of accessing that. If you have a facility which people don't access, that will also go waste, basically. So in terms of Philippines, I think the government's approach so far has been to use the private sector as much as possible. I have not really seen an appetite for, but maybe William may be able to explain a little bit more for PhilHealth and the PCIC. But possibly if there is a rationale based on all these risk parameters which are built in, if risk is actually managed, the insurance companies remain solvent, I think it's a good way to go ahead. There are a lot of countries like Mexico, India, even Japan. Their disaster insurance is something where a lot of countries, the government subsidize. The subsidy is not to reconstruct things. The subsidy is to rehabilitate livelihoods after a disaster. Remember that. It's not for better buildings. Say when a disaster strikes, I was in Japan for the Sendai convention. So it was made very clear to me by the Japanese Insurance Association. Our thing is to provide rehabilitation to the affected people after a disaster strikes so that they can start earning from day one. Building, restoring houses is the last thing on their mind. And that's why they subsidize it so that they can go back to normal lives as soon as possible. William, if you could like to elaborate.
We have 3 models on PPP in the Philippines right now that we have. One is with local government units, okay? The local government units have a calamity fund. And the law urges them to cover the vulnerable groups and the responders. So on that first model, the local government unit buys insurance for us for those vulnerable, from covering those vulnerable groups. Okay, that's the first model. The second model is the one we have with the DSWD for their 4Ps and other. What they do is that they enable us to conduct microinsurance literacy during the meetings of the 4Ps beneficiaries. And we offer them our products, and they voluntarily buy from us during those times. Okay. Our third model is in Mindanao, wherein it's a tripartite. There is an NGO, the LGU, and us. Okay. They enter into an agreement with the LGU that on the first year, the identified community groups, the premium is subsidized by the funder, by an NGO, okay? But on the second year, gradually, it will be taken over by the local government unit. And on the fifth year, it will be fully paid by the individual. So it's a gradual payment of premiums. So we have that kind of models. There are many other, I know, innovations that are being undertaken here. But there's no one very big,
There is no one model,
nationwide big model. And we believe that is most ideal. You cannot have, there are a lot of variations, even on the calamity fund. There is the village, there is, the assured, the client, the people should own the risk, okay? In other words, we cannot perpetually subsidize them. And mind you, our experience is that the poor knows the risk that they are facing. Provide them the financial product. And because they can relate to their need, they will buy it. They will buy it. And they will. And the beauty of microinsurance is that you buy it depending on your affordability and depending on your cash flow. At least we will be able to provide them the access.
Thank you, sirs.
Okay, we are bringing this press conference to an end. For your closing statements, gentlemen, may we ask you, what do you think is the benefit of bringing the discussions on the important issue of microinsurance on a regional level, such as through the APEC, and not just to discuss it in their individual economies?
Well, this topic of microinsurance is very relevant in APEC economics because a number of them are developing economies where insurance markets are very, very nascent, and the insurance markets need to be penetrated. In terms of microinsurance, of course, inside the APEC, Philippines is seen as a leader. There are two other countries where some interesting work has gone into microinsurance. One is Peru, the other is Mexico. So we have things to learn. Each have their own unique ways to deal with things. Again, everything depends on the geography and the risks which these countries face. So sharing of knowledge is important. It helps in better management of risk, and in terms of developing enabling environments, having microinsurance as part of the financial inclusion package, enhancing literacy, would all play a significant role in deepening financial sector development, developing capital markets, risk-sharing mechanisms, developing risk pooling mechanisms, which will all go to the benefit of bringing prosperity to these countries. Thank you.
I think there are three things. First is that it is very important that microinsurance should be recognized as part of the financial inclusion program. Second is that insurance entails pooling of risk. And, the ASEAN market is a very big market that can assure sustainability of the risk. And besides, we are one big market. So if the enabling environment for all on microinsurance will be accepted by all in the ASEAN, especially in the ASEAN or in the Asia Pacific, then there will be not only sharing of experience, but even perhaps pooling of catastrophic risk, or risk transfer would be easy, and the development of markets, and the third is that, of course, microinsurance is a very vital tool on poverty reduction, and with fostering this will greatly help reduce poverty.
Only one last sentence, I think, which I overheard when I was sitting on the other side in terms of why multinationals or big companies don't want to enter the microinsurance space. I'm not going into a debate, but if some companies are not entering that space, they are losing an opportunity, because these countries are moving from low income to middle income, and when they start and when they build assets, when their incomes rises, insurance will naturally be part of the portfolio. And all these institutions build on trust, basically. So one who has entered the market, has developed the confidence of the consumers, will definitely have a very good market share in the years to come. So, and ASEAN is a market where the middle class is rising. There will be a rising middle class. The same is true with ASEAN. It will be more than India and China combined in the next 20 years. So there is a lot of promise. So microinsurance possibly is the entry point in terms of developing and deepening markets.
Thank you very much, Mr. Arup and Mr. William, for sharing a lot of information to our friends from the media. Thank you.
Thank you very much.
Thank you very much.
To our friends from the media, thank you very much for your time and for your interest in our topics for this APEC meeting. Perhaps we're going to have one last press conference tomorrow around 1 or 1:30 p.m. after the half-day session. Thanks.